of the information, someone who's having a lot of fun helping a lot of people. U.S. Army Major retired, financial expert, a financial advisor, the creator of the BYOB cash out strategy. We call her the trade whisperer. Ladies and gentlemen, Ms. Tasha M. Dyer. Ms. Tasha, are you on the call?
Yes, I am. And I want to thank you so very much for what you do. I want to thank you for being so instrumental in the movement. Be your own bank. I just want to thank you for that. Now, ladies and gentlemen, I'm excited. I'm excited. Look at this, BYOB worldwide. BYOB worldwide. And when we're talking about worldwide, I'm looking at this chat. Oh my goodness, I'm looking at this chat. Bahamas, you know I'm excited to see you all on the chat because of everything that's happened and everything that's been going on. So I'm so very excited to see you on here this evening. We got Florida, Orlando, New Orleans. You know, I'm from Baton Rouge, so you're going to always hold a special place in my heart, right? That's home. That's home. So we are BYOB worldwide. Jamaica, as you're joining us this evening, make sure you go ahead and drop in the chat where you are calling from. Hey, Chicago, drop in the chat where you're calling from. I want to know who's on the call. I want to know where everybody is calling from. So drop in the chat. And if it's your first time on the call, if it is your first time on the call period, trading with the BYOB cash out, let me get a 111 in the chat. Let me get a 111 in the chat. If it's your first time on a tools training call, let me get a 222 in the chat. Let me get a 222 in the chat. Hey, Houston, how are you? So if it's your first time, welcome. Your first time on this call because this is specifically designed for training. Awesome. I want to welcome all of you. So I'm excited. You guys keep me excited. I'm excited when I look in the chat. Canada, I love it. I'm excited when I look in the chat. Hey, Nola, you know I know what that is. So, but I'm excited because when we look at the chat and we see what's happening and we see what's going on and we see the progression, the trend, you all are master traders. It's simply put, you all are trading all day. You all are knocking it out. You guys are cashing out. And so if you've been cashing out today on any level, let me get a 777 in the chat. Let me get a 777 in the chat if you've been cashing out. See, that's what I'm talking about. That is phenomenal. And that's not signals. That's not me taking trades. That's not what I'm looking for. That's you all. So you got to walk in this energy that we're about to do our affirmations. You always need to do your affirmation. I am a master trader. All my trades end in profit. I am a master trader. All my trades end in profit. And that's the energy that you need to walk in. That's what you need to speak. That's what you need to believe. That's what you need to know. So you know what, my chat need to be active right now. My chat need to be rolling as I begin to share my screen. Because as you're typing it, I need you speaking it. I need you hearing that. So yes, this is a tools training. Yes, tonight is specifically designed. It is specifically designed to make sure that you understand and how you can take this to the next level, to help you understand the why behind the what, to help you know what it is that you're looking for. But I need you to still walk in that energy as you're learning, as you're educating yourself, no matter what it is. So keep it coming. I am a master trader. All my trades end in profit. I understand the charts. See, you got to speak these things. The market speaks to me. I listen to the charts. I listen to the market. You have to walk in this energy. You have to speak these. So when I say the market talks to you, are you listening? You have to put yourself in that right mindset. So let's get started with this evening's training. I'm excited. So first thing first, I know we have some new people on the call. I understand and I listen to the charts. There we go. There we go. I am the signal. There we go. I love it. Keep it coming. Keep it coming. Now, so we have some new people on the call, but as always, either regardless if you're just getting started trading the cash out or if you've been trading the cash out for quite a while now, I always want to make sure you understand how to trade it. And understand as while we're going through trading tonight, if you have a question, I am the bank. Yes. If you have a question, drop it in the chat. Tonight is the night to get your questions answered. Tonight is the night to make sure you understand. Tonight is the night to take this to that next level. So you definitely want to drop those questions in the chat. So first things first, as you notice, we are migrating and we are upgrading. So you will hear me sometimes say Web Analyzer, I'm getting my language correct. It is the vibrato, right? It has been updated. And so you see it says the vibrato, formerly Web Analyzer. So that's the tool that we're on right now. This is the tool. So with that being said, look what we see, right? This is what we're looking at, is see, I told you, I get it right. Mastery Academy Vibrato, right? Now what this tool does, this tool scans the market looking for entry triggers. So understand, just so I want everybody to understand, that when we are in the market, we are marking up charts. This is when you begin enrolling. You pick your currency pair, you begin to mark up charts. You actually, now this is actually a training call. I will use that as an example, but this is not a live training call. So I do want to make that clear. This is a training call. So if you know how to trade, if you know what you're looking for, go ahead and take your trades, but tonight we can analyze different things. Of course, if we see something, if we do see a trade that we want to take, then we'll take it as if while we're training that we do see a trade. But I just want everybody to understand that what tonight is all about. Tonight is definitely about education. It's about tools. It's about putting you in a position to win. So tonight is all about that. So I know I will get some of those. I get them every Tuesday. So I just want to make sure that we are, everybody's on the same sheet of music from an education standpoint. Now, what the vibrato does is it scans the market. So when you start marking up charts, you need to understand support, resistance. You need to understand trend lines. You have to understand so much in order to be able to execute a trade. And so you have to find those entry triggers. Those entry triggers are found when you're looking for through that support and resistance, through the trend, through moving averages. And that's how you find your entry trigger. It's so important for you to understand where you enter the market and where you exit the market. That is so very important. You always want to make sure you understand where to enter the market and where to exit the market. So when I'm looking, what the vibrato does is it scans the market. It scans the market and it finds those potential entry triggers. That's what it does for us. And so we have a currency pair that we're following. And so what I'm going to do is I'm actually going to do a new share, and I'm going to show you our currency pair, and you're going to see my highlighted chart, right? You're going to see my highlighted chart because this is the currency pair that we are going to follow. We're going to learn the market with it. So GBP JPY is our currency pair. So I was actually, let me take this off. I was actually looking at it. So I just use this because I want you to understand. So this is where we were looking this morning, and you got to look past my highlights, right? But I want you to understand why this tool, why it's so relevant and why it works so well. So if you notice, this is when it was in that uptrend. And while it was in that uptrend, you have what's called higher highs and you have your higher lows, right? Because I'm in an uptrend. And so what you notice is where you see these circles, is you have these circles that actually find those entry triggers, right? You actually see these circles where you actually find those entry triggers. Now, this is what we're looking for when we're trading on our own. So I'm gonna go back to my share so I can kind of break down the web analyzer for you and what it does. So what the web analyzer does is it scans the market, and when it scans the market, it gives you those potential entries. I'm sorry, the vibrato. I told you guys are gonna have to work with me. just a little. Those, my colorful lines and my colorful creations are support and resistance lines. And so if you notice, we've been kind of trading and we've been following that currency pair. So we keep dropping them on there to kind of show you, you know, what it is that you're looking for. So that's just the support and resistance lines that we've been using over the last couple calls. So, because we've been following that pair. And I just made them colorful so everybody can see them. But when I'm trying to show you something else, it does look like a coloring book. So once again, what the web analyzer does is it scans the market. And when it scans the market, it's looking for what's called an entry trigger. So the entry trigger is what you're looking for to enter that trade. However, you're looking for those areas of value. What are those areas of value? Now, I don't have to go through and mark it all up. I don't have to go through and do all of that. But what I have to do is I have to understand how to properly execute the trade. So when it gives me that call price is an entry trigger. That's what that call price is. That's an entry trigger. Now you then select a strategy. There are many strategies within the vibrata. There are many strategies, but what you have to do is you select a strategy and you apply that on top of it. Now, these calls, understand that says potential sell, potential sell, potential buy. That is not a signal. That is not a signal. What that is an entry trigger, right? That's an entry trigger. And I cannot stress or emphasize that enough. That's an entry trigger. Now, with that entry trigger, you then take the strategy and you apply. So just because it says potential sale does not mean I take it for a sale at that moment. You have to select that strategy and then you turn around and you apply it. So first thing first is I have my stochastic. When I select the BYOB cash out, I'm using it and I'm following it for 3 confirmations. I got 3 confirmations that I'm looking for. Now, I told you about areas of value. Why is the cash out so accurate? What does it do? Because it scans the market after it scans the market, now I'm applying the 3 areas of value. The stochastic. The stochastic is comprised of, that's a momentum indicator, right? It's comprised of closing price, moving averages. So did you hear that key word in there? Moving averages. That's why that stochastic is so accurate, but we cannot use this by itself. So my stochastic is going to measure momentum in the market. So what tells me the direction of what I'm looking for, what tells me the direction of the type of trade that I want to take is my stochastic. If it's around the 80, I'm looking for a sell. If it's around that 20, I'm looking for a buy. So you can actually, with the cash out, you can actually trade the correction, you can trade the direction of the trend. So I let that be your decision if you want to trade the market correction. So what I found is it's about half and half. Half of you all like to trade only with the trend. Some of you all will trade the correction and just take less pips. But you want to practice that in your demo account. But I'm saying that because it's ultimately important for you to understand and why it's only 3 confirmations. But as we go through this, I'm going to give you an extra one to help you understand the trend of the market. Now, the stochastic, it starts around the 80. I'm looking for a sell. That blue line needs to cross over the red. The red line is the signal line. Understand that. That's the signal line. And that's pretty much the last 3 of the blue lines. Now, the blue line is what you call a stochastic fast. So that tracks the market rate for that currency pair. So when I'm looking at the blue line and it's pushing away from the red line, then that's indication of strength. So understand, this is the market rate for those currency pairs. This is the signal line. So when the blue line crosses over the red in a downward momentum, when the blue line crosses over the red in an upward momentum, that determines the direction of my trade. This must be your first confirmation. This must be your first confirmation. Okay? You do not do any other confirmations until you do this one first. So keyword, it starts around the 80. Next, I'm looking for my Hikanashi candles. My Hikanashi candles typically come second. So I got my red Hikanashi candles, and then I have my green ones. Red means sell, green means buy. For a sell, I need a red candle with a flat top. For a buy, I need a green candle with a flat bottom. That's very, very important because that indicates strength. If you notice where I have the arrow already prepped for us to discuss, it's on the second candle. It's not on the first candle because it has a wick in there. Now, when you enter your trade, for example, you will see, I'm gonna show you the difference between the Japanese candles and the Hikanashi candles. When you enter your trade, right, look at the difference of what the candles look like. You see the difference of the Japanese candles. I don't care about all of the noise. We don't really want to know all the back and forth and everything that's happening. Bottom line up front. That's what I care about, the bottom line. The bottom line is this is an overall trend. These are trend candles. So we talked about trend lines, right? So what is this comprised of? The trend. I want to know the trend of the market. I want to know what the market is doing and not all the back and forth that the buyers and sellers are going through. So I got my stochastic. I have my Hikanashi candle. The last thing that I'm looking for is my PSAR. My PSAR is a parabolic stop and reverse. What that means is that's price reversal. So that's price reversal in the market. It's like you have a trailing stop loss, a support and resistance line that's moving with it. So you always want to you have your PSAR, and that PSAR is going to flip. So we noticed that it was at the bottom, so it was pushing up with a buy. And then once that PSAR flipped, now we have 3 confirmations for a sale, right? We got 3 confirmations for a sale. So what that tells me is, and I'm gonna put this line here because I want you all to see this. I said it starts around the 80. It's not a guarantee it's gonna be on the 80, but it's gonna start around the 80, right? But look where my momentum was. My momentum was down towards 60 by the time. Understand it's a momentum candle. It's a momentum indicator. So I need the momentum to push. I need the momentum to keep going. The momentum is not gonna stay where it's at. So the momentum needs to push and keep going. So I'm saying that when I'm emphasizing something, that's because those are questions that I continuously get. So it starts around the 80, it starts around the 20, but yes, by the time you enter the trade might be way down here somewhere. So, I mean, the momentum might be way down here somewhere, and that's okay. It's just, what is everything else doing? So those are my 3 indicators, and I need to be on a 15-minute chart, but that doesn't matter right now for what I'm showing you. But on the 15-minute chart, 10 pips and cash out. It's market execution, 10 pips and cash out. So my stop loss goes above my PSAR. As you can see, look, perfect example right here, perfect example. Look at this right here, right? It actually, the candle will touch the PSAR, it will touch it, but it will not go outside of the PSAR until it flips. You know how if you are looking at anything, if you've seen any support and resistance training, it will touch that line, but until that trend breaks or until it breaks through where it's at, it doesn't go outside of it. So it might push through it just a little bit, but when we're dealing with the trend candles in the PSAR, it will touch it, but it will not go outside of it until you have a reversal. Once that PSAR flips with that reversal, that's when it goes out. So I never want my stop loss in between my candle and my PSAR. My stop loss always goes outside of it. And you do not have to worry about it touching it until the actual market reverses. So you can actually move this with it. As long as it stays, you can do a trailing stop loss with it. As long as it stays outside of the PSAR. Before I take it to the next step, do I have any questions? Any questions on anything that we just covered? If you have a question, drop it in the chat. No questions? Awesome. So what tonight's training, that is the BYOB cash out. But what tonight's training is about time frame confluence. time frame Confluence. And I see you all doing it. I love it. I love it. I love it. But I want to make sure you're doing it right, right? The PSAR doesn't lie. All right, Jeff? So I want to, okay, let me answer this question. Around the 80 means it can be by the 60. No, the around the 80, right? Around the 80 mean I don't want you missing a trade because you're looking at it to be dead on the 80. You're looking at it for it to be directly on top of the 80. You're looking for momentum. So you see the momentum was already up here, it peaked down a little bit and it came back up. So this is what I mean about around the 80. You're gonna have to use some of your gut, some of your and if you didn't want to take this one, then if it's not close enough for you, then don't take it. So no, the stochastic is the first confirmation. This is the first confirmation. This one is important. So this is not the extra one. So for example, if I see a trade that starts here, and I'm on the hour time frame too. Let me drop down. So here is actually where my momentum started on the 80. And now you see nothing else was ready at that time until it got way over here. So what you see is it's actually around the 50 now. So it is exactly, it's like a roller coaster. So what you're seeing is the momentum is coming down. We want the momentum to be moving. So by the time you enter the trade, it can be at the 60. By the time all three confirmations are met, actually when on a 15-minute chart, when all three confirmations were met, we were around the 50, right? We were around the 50. So around the 80 does not mean around the 60. The momentum started at the 80. The momentum started at the 80. So it did not, the momentum started at the 80. It did not start at the 50. So that's why when you ask the question, around the 80 means at the 60, okay? Around the 80 means around the 80, but it can be at the 60 by the time everything is activated, if that makes sense. So next question, if you get a PSAR flip, you have to wait for the next candle to be flat. No, you can enter, for example, this one actually, the PSAR is flipped before the candle. The PSAR flipped before the candle. It's got flat. So normally you have a PSAR, the flips after the candle. That's what normally happens. But in this situation, like for example, this one flipped and then we got a PSAR. But in this situation, we actually had a little consolidation. So the PSAR can flip first. The PSAR can flip first. However, normally you get the candle first. So these are what you call trend candles. These candles do not form as the Japanese candles do. So when these candles form, we got about 6 minutes on this time frame till another one forms. But when these forms, they form solid. So we don't have to wait for a candle to close or to finish closing because they form solid. That's if I drop down to the 5 minute, while we're talking, you will actually see one form. And the only thing I do is I'll wait maybe a minute on that first one to make sure that we don't get a wick that pops out of the top. But these are trend candles. So, right. The stochastic is definitely like a roller coaster, definitely. So can I repeat the blue line crossing over the red and what it means? I sure can. So the stochastic, and this, as Jeff is saying, is the roller coaster. So my stochastic, the stochastic is my first confirmation. The stochastic is the first confirmation that I must take. So when I take the stochastic, when I look at the stochastic, so if my stochastic is looking for a sell, right, that means that the blue line is crossing over the red in a downward momentum. When I am looking for a buy, the blue line crosses over the red around the 20 and an upward momentum, because this is momentum, right? This is momentum, 80 to 20. And if you notice, if you keep going back, what is it doing? As the charts move, so does my stochastic. As the charts move, my stochastic continues to go up and down. It can go all the way to the 100. It can go all the way down to 0. But if you notice, there's a range that it typically stays in. And that's why this is around the 80 and around the 20. So when you see this, you don't look at this and say, you know what, it's below the 20, so I don't want to take it. But I want you to have that same mentality when you see this one a little bit below the 80, right? That's why the key indicator and the key word is around. So the red line is a signal line. The red line is a signal line. The blue line is what we call a stochastic fast. You notice the blue line, when sometimes it starts pulling away from the red line. If it starts pulling away from the red line, that means that it's very strong, it's moving fast. So you want that blue line to cross over the red in an upward momentum, and that is my stochastic fast. That's what that is, my stochastic fast. It tracks the market rate for that currency pair. So that's mathematical calculations that we don't have to worry about, but we know what it is and what it's doing. If you draw a horizontal line to the flat, yes, that's what I call your pip reaction time. Your pip reaction time. And that's why this next confirmation is so important, because if you're doing 10 pips and cash out on a market correction and it only goes for 12 pips, right? Then you want to know what your pip reaction time. So you've tested your pip reaction time. So you want to know, and what he's talking about, what the question has to do with is, if you know, you look at from when the trade is activated, because you'll see us activate the trade from right here. But this might be where you actually get in a trade, market execution, right? So you might have missed a good 4 pips already. I've even seen where some people might not even get into the trade till way down here and then wonder, let me make this yellow so you guys can see it, and then wonder why they're having an issue and they're not taking profit. Why are some people taking profit and some people not taking profit? Well, the trade actually activated way up here, okay? And it took you forever to get, it took you a minute to get in the market, whether you were still trying to find your currency pair or what it is you were doing, hitting that market execution, right? So this is what you're actually looking for. So this one was a little bit over 4. This one was 8 pips already passed. And I've seen that. You want to know what your pip reaction time is. You definitely want to know that. So you want to switch to the Japanese candles. Matter of fact, these are the Japanese. This is what Japanese candles look like. I'm going to put an arrow just to make sure that you can see it. This is where the trade activated, right? And I'm going to switch it down to the Japanese candle. These are the Japanese candles. That's what they look like. And you notice that when the trade activated, it actually had a little green underneath there, right? But they're focusing on the overall trend of the market, the overall trend of what's happening. That's what it's looking at. That's what it's focused on. It's already down a few pips, even if you have a millisecond. You don't have a millisecond reaction time. I can promise you that. But this is what you see on your phone. But what you're focused on is this is where the body was. But this is still, if you understand the Japanese candles, then you understand that they have an open and a close. So this means that it opened right here. And so actually this candle being green would have gave you some pips back based on where you got in the market. So this, you would have actually got a few pips back. So you want to check your pip reaction time, right? You definitely want to check your pip reaction time. That's where I'm headed next. Let me get there. Let me get there, CB. That's exactly where I'm headed next. So now let me go back to the 15-minute time frame for that next confirmation, right? So this is where this trade activated, right? This is where this trade activated. And this trade actually went for about 20 pips. So now when we're talking about a factor of 4 to 6, a factor of 4 to 6 means that I'm on a 15-minute chart. What's 15 times 4? Anybody? 15 times 4. Drop it in the chat. 15 times 4. Exactly. So that means that I want to go to the 1-hour chart, right? So you see I have my arrow. This is where our trade would have activated. I want to go to the 1-hour chart and I want to see what the current swing of the market is. So whether the market, because on a higher time frame, understand, on a higher time frame, This one happens to be in an overall sale, right? During this, right? Impulse, correction, continuation, right? So, of course, we had this little piece that came up right here. But look, so now we're in this sale. So understand on the higher time frames, it's going to take longer for me to come up here for this buy than it does on the 15th. So, and then we're coming down for a sale. So I'm not looking at the overall big picture and the trend of the market. What I'm looking for is the current swing of the market. I'm looking for what's the current swing, because on a 15-minute time frame, I'm going for 10 pips. I'm looking for 10 pips. So you're going to go through 10 pips before, if we were here going back up in that buy. So what's my current swing in the market? Now, when I'm on an hour or higher, or I'm swing trading, because this strategy is not just a scalping strategy. This strategy can be used, I don't care what your trading style is. But if I'm on an hour time frame, then I want to look at the higher time frames, and I'm looking at of course, the swing in the market, but I want to be with the overall trend of the market as well. But I'm looking for 10 pips right now. 10 pips so I can cash out, right? 10 pips. So I need the current swing in the market. And that current swing in the market is a sell, right? My trend is a sell right here. So I go back down to the 15. You see that? And I'm looking for when I got it on top of that, but you're looking for when this got activated. Now with my pullback, okay? Now I know I can sell it. But how long am I going to be in this trade? So to help with my pullback, this is what this is for, right? Because I want to help with my market correction. I go down to the 5-minute chart. And on the 5-minute chart, you see that I'm in the sell. That gives me a tighter entry. That helps give me a tighter entry, and it helps with my pullback. So as you notice that I can grab my 10 pips, okay? If you want to do anything higher than 10 pips, you need to understand market structure. You need to understand your support and resistance lines, and you definitely need to understand the support and resistance and the trend lines. So because you notice that when you get to these points, right, the market will pause. Like we had a really, really good example last week. The market will pause, and it will not allow you to push up when you got a strong downtrend. That's why it gets stuck at my checkpoints, right? It gets stuck at these support and resistance lines. It gets stuck there because if I'm in an overall downtrend of the market and it's trying to do a correction, it's gonna get stuck where it's not gonna allow it to push up. So let's see. Let's just let's do a check on a factor of 4 to 6. If I'm trying to trade the hour, right? Let's come up here. I want to trade the hour right here. I'm gonna take this one off. So I want to trade on the hour time frame. So this is when it got ready. What is my factor of 4 to 6? What time frame should I check? Somebody drop it in the chat. The 4 hour, exactly. The 4 hour. Jump to the 4 hour. And what's happening with the 4 hour? You notice I was in a buy, but now look at the candle that I have, right? Look at the candle that I have. It's giving me, it's shifting, it's turning. So I know that I'm going into a sale, right? So on the hour, it's giving me a lineup for a sale. Go to the 4 hour, is turning into a sale. That helped. You want some pullback? You want some pullback? You're going to get some significant pullback on the hour and the 4 hour. You all don't like pullback on the 15-minute chart. You don't have time frame confluence on the higher time frames, your pullback is going to be significant, right? So you always want to make sure you check that. Hold on, my mouse froze. Give me one. Soon as that gets back, here we go. Come on, mouse. So then we want to go to, I'm on the hour, I'm trying to trade the hour. I'm looking for the current swing of the market. I'm looking for that trend. I'm not doing any, my analysis is done on the time frame that I'm trading. When I go up to the higher time frames, I'm not checking the stochastic. Of course, I don't want to point straight up in the air, but you see where it's at? It's at the 50. That's not my concern right now. My concern is what's the current swing of the market. Am I going into that sale? Am I going into that sale, right? And then I drop down to the 15-minute time frame and get my tighter entry. I drop down to that 15. You can check the 30 and the 15 to get you a tighter entry, right? Definitely can check those time frames. And if you notice that, look at how around the time frame that this trade activated. Look at all, it had passed all the consolidation. So you could have been trading it. You could have began trading it from here. And so you notice you get some market correction and it pulls down. So let me show you this market correction. What does a tighter entry mean? I do not have to, why do I go to the lower time frame, entry on the lower time frame? If my lower time frame is going into a buy, if I'm trying to sell and my lower time frame is going into a buy, that means I'm entering in market correction. I don't want to enter the market in correction. You can enter the market in correction. However, you're going to get pullback. You're going to get some pullback. So I don't want to enter in that market correction. I want to enter the market when I got time frame confluence across the board. And that helps with your correction. That helps with you having all that significant pullback that you experience in your account. That you have a low account balance. Let's say you start your account with $150 or $100. We don't want to blow your account. Because your account is not, especially if you try to trade on the hour, your account is not going to be able to handle that, right? And you're going to blow your account. So you don't want to do that. You want to make sure if you got time frame confluence across the board, then guess what? I already have my 3 confirmations with 3 areas of value. When you learn trading, right? And no, that's great. But when you learn trading, you need 1 area of value to actually enter a trade and find that entry trigger. But you have 3. You got 3 areas of value and you get that entry trigger. Now, when you add time frame confluence, some of you all still want to trade the correction, and that's fine. And I'll teach it and I'll show you. But if you want to just straight across the board, time frame confluence, you all have been the ones who were on this call last Tuesday, because this is a continuation from that call last Tuesday. But the ones who have been doing it over this past week, if you've been trading and they've pretty much almost been at 100% on their trades. So if you've been trading, and that's without me calling it, that's without me giving it. And I'm going to give you the disclaimer, past profits don't guarantee future success. I have to give you that disclaimer. But if you've on this call and you've been using the time frame confluence in addition to your 3 confirmations, and you've been winning your trades, let me get a 777 in the chat. Let me get a 777 in the chat, right? Because I even had someone that was struggling with hit or miss on the trades, and they text me and they had a high percentage. They were in a 90-something percentile of their trades just by applying this strategy, just by applying the time frame confluence. So, I've seen where I'm 7 for 7. I'm 20 for 20. You guys are killing it, and you're doing it because you understand the strategy, you understand how to do this, and then across the board, now you add the time frame confluence, right? You add that time frame confluence. Yes, most definitely we can go over it again. Yes, and now let's look at a different currency pair. Where's that currency pair that somebody wanted me to look at? Let's look at that, because they wanted us to trade it. They wanted us to trade it. And let me see, where is it at? Euro NZD, right? The 1 hour time frame, keywords. If you're scalping on a 15-minute time frame, the 1 hour time frame is the same. Keyword, what's the current swing of that hour, right? What's the current swing of that hour? Like, I don't want, this one might be a good one, because look what happened. So I'm quite sure you probably tried to call it for a sale, right? I had my blue line cross over the red, first confirmation always, right? First confirmation always. Then I had a red Hikinashi candle with a flat top, and I had a PSAR flip. Beautiful, right? Ready to enter the trade, right? It actually went for 23 pips. So, but let's walk through all of the steps. Let's walk through it. Actually, we got 2 good candles on this before it started shifting and turning around. If I go to my hour, right? Well, this one actually began shifting. I thought we was gonna have one that didn't, but you know, I go to my hour. I had green candles, right? I had nice green candles, but I also, this one wicked out at the bottom for me. This one wicked out at the bottom for me. When you see a wick like that, that indicates shift in the market. That indicates that the market is turning. That indicates that my trend is beginning to change. But the thing with this is it really beginning to change, or is it really beginning to, because remember, this wasn't here, or is this just a pullback on a lower time frame and then it'll continue to go up? So until you begin, you know, going through the market and understanding, so that's when I want to look. Oh, okay, guess what? I'm in a nice strong down. I'm in a downtrend, and this was actually a correction. So that's where you want to. This is what you see. Your eyesight still has to come. Your eye, exactly. Your eyesight still has to, is so important. You have to use your eyesight. And so when I see something like that, I actually drop down and I check the 30-minute time frame to kind of see what it's doing, because I need that 30-minute time frame also to be in that correction, right? And then I turn around and I drop down to the 5-minute time frame to see if I can actually enter that trade, right? Because if it's moving up, if it's going up, then I definitely don't want to enter at that moment. I want it to be in a sell as well. Yes, that's what time frame confluence means. That overall, my market is doing the same thing across the board. That's exactly what time frame confluence means. That overall, the trend of the market is doing the same thing. So let's see. Right now, what's my, so correct, because I'm looking for one that's not going to line up. That's what I'm doing. So I can show you why. So if anybody sees anything, drop it in the chat and we'll definitely go over it. This one is consolidation. They say it makes a lot of sense. I'm glad. It's all about you winning. You accepted the challenge to be your own bank. It's all about you winning. It's all about putting you in a position to win. That's what this is all about. You see one? Let's put it in there. This might be one too. I'm gonna put it over here. Yeah, CHF is good for faking you out. So let's see. Were you looking at it from this one? Well, I'm on a daily, so let's go. Okay, so by the time this got ready, let's just look at this one. Look how little these candles are too. So we probably wouldn't have been trading this one just off GP. We probably wouldn't have been trading this one. But look at it, the momentum started down here, but by the time it got ready, it was all the way up here, right? So that's already key indication that we probably wouldn't be trading this trade, along with, look at these candles, right? Look at these candles. So now if I jump to the hour, actually, why would the hour be going in a buy? And I go to the 5-minute and see, it kind of faked us out. Look at that. Look at that. It kind of faked us out. So it's a little choppy, but it's doing what it's supposed to be doing. It's doing what it's supposed to be doing. It gained some strength on us, and it gained strength because when I went to that high time frame, right? We went to that high time frame. Look at what's happening on a higher time frame. We got a strong buy, right? Got a strong buy. So let's go back and look at this one. So this one was a sale right here. We're just gonna analyze a couple of them and maybe we'll find one. Hopefully we will. So a sale, go to the hour. That one's in a sale. That one's happened to be in a sale across the board. So we're gonna find one. I want to show you guys, and that's the thing with the live market, right? That's the thing with the live market is we need to kind of go through them to see. We got to go through them to see because we're dealing with a live market. So we got to just randomly pick some currency pairs. Oh, are you checking your leverage and your lot size? We definitely want to do that. I definitely don't want anybody doing that. And there's no reason why anybody should be doing that. So some of you all can't see the message, but so I'm not going to say who it is, but you want to make sure that you're doing proper leverage. You want to make sure that you are definitely using proper leverage and you're using the time frame Confluence because we want everybody in position to win. We hear it so much and so often, you know, you're going to blow your account. You're going to blow your account. Well, you don't have to, right? You don't have to. And you don't have to if you're practicing proper risk management. You don't have to if you're understanding the strategy that you're trading. You don't have to if, you know, you're not just looking for signals, right? You don't have to if you can. The key thing that you want is to be able to take what you've learned and come back and do it. When we say enroll, learn, profit, is you enroll. You learn a skill set. You learn how to utilize the tools and it put you in profit. So no, you don't see a lot of signals coming from me. You don't see a lot of signals coming out of our group, our Telegram group, because you are the signal, right? And somebody made that their affirmation when they dropped this on the chat. I am the signal. Yes, you are the signal, right? Because what if something happened and I couldn't send a signal or I couldn't tell you what to trade anymore? We do not want that environment created. You know, we definitely don't want that environment. We want you to be able to, for example, right, grab your 10 pips and cash out. Come to the higher time frame, right? Come to the higher time frame. Understand the support and resistance lines, being able to understand how to maneuver and navigate through the markets and where you can potentially on here, potentially grab about 50 something pips, 55 pips almost, right? You want to be able to know, oh, what? I can enter the trade. I can enter here. I can enter the market. You enter the market, that's another 55 pips. We want you to be able to do that. This works on indices. It works on cryptocurrency. It works on gold, metals. It works across the board. Matter of fact, I love it. We just had a post. Someone traded Apple, right? Apple. When I tell you this strategy works on everything, it works on everything. And the testimony that came back was, I'm an Apple person. It felt good to get some of my money back. I love it. I'm telling you, you cashing out on your own. I never called anything on Apple, but guess what? They traded Apple, and guess what? They won. They won a trade. So you can trade on anything. You want me to look at GBP? Didn't we look at this, the CHL? Then we looked at something in this kind of, this in consolidation, I'm not touching it. Look at this. Look at all this choppiness, right? Look at this choppiness. You got wicks coming out of each side of these candles. So I'm definitely not taking a trade on here. Even on a higher time frame, look at what it looks like, right? So this one been in consolidation for a minute. So I don't trade consolidation. The market confused. The market, that's market indecision. So if the market has indecision, that means your trade is going to be indecisive, right? So we definitely don't want to touch that. Not at all. Let me tell you what I love, right? When you grab this, guess what? Let's drop down to the 5-minute chart. Let's scalp it, right? Let's scalp it. So I can turn around and I'm grabbing pips. I'm grabbing points, not pips. These are points. And let me not say pips. These are points. That's 58 points, right? So you can go grab 20, 30, turn around, bring it up. That's another 25 points, 26 points. And keyword, what do? It's points. It's points and not pips. You know, you can convert it, but what are the key things? Oh, you're so welcome. What are the key things that you're looking for? We're telling you, no emotions, no emotions, no emotions when you're trading, no emotions when you're trading. You read Bloomberg today? Ha! Exactly. You go to Bloomberg, they're going to talk to you about points. When you're looking at what's happening in the market, remember you got technical analysis and you got fundamental analysis, right? I'll go over that. Let me go over that for you. Let me explain this and I'll explain what the points are. You got technical analysis and you got fundamental analysis. When you're dealing with indices, indices are the top 30 US companies, right? They're the top 30 companies. So companies, what do the companies do? The companies react. For example, the president sent a trade, right? The president sent a tweet today. He didn't send a trade, he sent a tweet. And the market dropped about 240 points. It went down 240 points. So when you're watching Bloomberg or you're listening to the people talk about the news and what's happening in the market, they're talking about points. So I don't want to mislead you or misguide you and tell you, hey, you got 2,400 pips, but that's not even going to be mentioned on Bloomberg. It's not. So we want to keep, if I'm telling you to go watch Bloomberg, I'm telling you to trade non-emotional, I'm telling you to cut the news off, but when you're trading indices, you need to be knowledgeable of what's happening because this is affected more fundamentally than other things are. So you got a lot of fundamental analysis that goes into this. And so you need to understand what's happening in the market, right? You need to follow the president on Twitter. I'm gonna tell you again, you need to make sure you're listening to Bloomberg, right? That's where they're talking about the markets. You might not understand it at first, but you will, I promise. So somebody asked the question, what's the difference between pips and points? When I run my ruler, right? I run my ruler. You know, whenever the market has been consolidated or has been in that range, so we have not done an index trade, right? That's pretty much the only thing that we put out for the most part is index trades. And when we do, we average about 150 points a day, right? 150 on the call. When we do it, we're gonna hit take profit 1 and 2, pretty much. And that's because tuned in to technical analysis and the fundamentals, right? Bloomberg is in the backup. Our mind, get up and turn on Bloomberg. You see what's happening in the market. That's gonna help you accurately analyze this trade. Now, the difference between pips and points. If you look on the left side, of that bar, you see 101. I'm gonna just bring it down to, let's say 100. You see 100 points. That's 100 points. That is what the market makers and the market movers refer to it as. Remember, we are riding the wave. On the right side is where you see pips. So it sounds good to say, oh, I got 1,000 pips. It sounds real good, but it's not realistic. And it's not realistic because who's talking about pips? Just us on these calls in the Master Academy. We're talking about pips. Now we're talking about pips when we're talking about other things that are moving as far as foreign exchange. But when we're talking about indices and you try to have a conversation and you understand in the market and you understand what's happening, is based on points. So we never convert it. So even if you're around someone that does convert it, I want you to understand that if they say 1,000 pips, it's really 100 points. So it's all about making sure you're empowered. It's all about making sure you're knowledgeable. It's all about making sure you understand the game. You understand how to ride the wave, and you're operating from a knowledge base. So a knowledge base. It's not that different currency pairs, are there currency pairs that are better to trade than others? No, it's not that different currency pairs are better to trade than others. You do have some that move more, you know, you do have some that have more movement, right? But it's not necessarily that anyone is better to trade than another. So you have to gain your relationship with the market, right? You have to gain your relationship with the market. For example, right? Just key example. When Mr. Rogers gets on here and he talks about, he does indices, since we're on the indice chart, when he does indices, he's a swing trader, right? He's looking at it from the hour and the 4-hour time. He's looking at it from the higher time frames, right? That's where he's looking at it from. See how this nice drop was so beautiful earlier? Look at that. That went down 333 points. I know when we were looking at it earlier, it was about 240. So now, yes, pips and forex. Pips is foreign exchange currency pairs. Yes, it is. But points is indices, okay? Points are indices. Pips are foreign exchange. And so when you're looking at this, you know, he's looking at it from this perspective. I'm not calling a trade from here. I can do it, but I'm not doing it. I'm dropping down to the 5-minute chart, and I do the 5-minute chart because it moves so much faster. I'm going to the 5-minute chart because I can scalp it. Okay. I got 41 points here. I can turn around, grab some more points. I got another 20 something. I can scalp it. You know, I can catch all of the ups and the downs and don't have to deal with all those pullbacks. You know, me personally, I don't like the pullbacks. I don't. So I will trade on the hour chart, but I'm not swing trading. I know how, because I always want to be in a know. I always want to make sure I'm ahead of the game, and I always want to know if I'm teaching you something and I know it works. So I've done it. But my preference is the lower time frames, the hour and below. That's just my preference. You have to get your relationship with the market. I think when you're learning how to trade, it's best to scout as you learn your personality and as you build your relationship with the market. I do think that, because you can grab 10 pips, cash out, you can compound it and keep going. It builds your confidence. It helps you understand what's going on, right? It gives you all of that. But what it's not going to give you, right, is not going to give you is that comfort and that confidence if you're on the hour time frame and you don't understand pullbacks, or you're trying to trade the daily and you don't understand pullbacks and you blow your account, right? So that's something you definitely want to understand. So before we transition this call, I got enough time for maybe one more question. Make sure we get all your questions answered. And hopefully you all understand time frame Confluence. So you can add that to your kit bag, your tool bag, and you can cash out. Do I have, oh, you're so very welcome. Is there a doji on the hour? On this one? Yes. Yes, it is. No, I don't trade the 1-minute chart. And the reason I don't trade the 1-minute chart is because it moves every minute. No, but seriously, if I'm trading time frame Confluence, that's something I like to trade. How can I drop down and double check that? So I don't personally trade the 1-minute chart. So you're so very welcome. You're so very welcome. I know people do, but I like, it moves so much. I personally like, hey, 225 in the house. Yes. I personally like to trade it. I'm doing a 5. I grab my 5 pips from there and cash out. So this is recorded. This is recorded and it will be posted. Stay plugged in. The Telegram, you want to learn more? Make sure you're in the Telegram. Somebody dropped the Telegram in the chat. Make sure you're in the Telegram and in the Facebook group. You know, this is what we do. It's all about empowering you. We do a lot of education, and even the students, everybody that, even I'm the master traders, I'm not even saying students, the master traders that are in the group, they're cashing out, and everybody, it's a community in there. It's a wonderful community. It is a wonderful community where people are paying it forward. They're learning, they put in some time, they made sure they learn it, and they're paying it forward. So we have a wonderful Telegram group. Wonderful. It is time to transition this call, but let me really quick. First thing first is I'm looking, now yes, I'm on a 1-minute time frame, but I see a good setup. So we don't trade the 1 minute, I just said that. First thing first, I'm looking at my stochastic. My stochastic, the blue line cross over the red, and a downward momentum around the 80. Second, the stochastic must be first. I don't look at any other confirmation until the stochastic is met. Then I look for my trend candles, right? Because I know I'm looking for a sell, then I look for my red candle with a flat top. And the third confirmation would be that PSAR flip, my PSAR moving along the top. Run the ruler. You want points? Run the ruler. Run a ruler across it, it'll tell you how many points. Oh, but also, let me tell you a trick. Go to advanced setting on your cell phone, on your MetaTrader 4, And those two numbers that are the two numbers, the bigger numbers on your phone, those are your pips and your points, right? Those are your pips and your points. So no matter what it is that you are trying to trade, you can run that ruler across it, or you can actually look on, I mean, it's also right here. Know that that last digit, that last number, that very last number is for the brokers. So your points run across the top, and that pipette that we know that's on the pipette that we always ignore, everybody just says, oh, ignore it. That's for competition for the brokers. That's to help the spreads and help the brokers. That's why we ignore it. That's why we don't pay attention. I do not recommend a broker. I can't recommend a broker to you, but you know, that's why we ignore it. Just like the zero right here is, you see, it's the spread for the broker. So your points are the digits, but you can look at your cell phone. Those two numbers that are highlighted, those two bigger numbers, those are also, you know, because even cryptocurrency, they count pips different. They move a little different. So you always want to know how to accurately count it. So, but those are different ways to help you out. Before we transition, Mr. Rogers, you have any comments? So let's see. Let me stop